We are in a recession, according to Michael Burry, who also criticized the White House for attempting to define what a recession is. Today, we're going to look at what Michael Burry had to say about the economy, and let's see if he is correct. We'll go through the different components of GDP to show how bad the economy currently is, and we'll also talk a little bit about how you might position your business. He made these predictions before the GDP data came out, and the GDP came in negative in the most recent quarter, with GDP falling 0.9% after it fell in the first quarter as well. So is it all doom and gloom? Not quite, remembering the most millionaires were made in 2008, so surely we're in for a ride with this recession. Anxious investors are looking through tweets from Michael Burry, who is most known for his bet against the housing market boom before the financial crisis, as the markets are in chaos and a recession looms. Burry is a surprisingly popular Twitter user. However, his enigmatic tweets, which vanished from his accounts a short while after their sent, have captured the attention of anxious traders seeking direction in an uncertain and fast-evolving trading environment. The tweets, which include topics like inflation, the Federal Reserve, the recent stock market crash, indicate growing concerns about an economic collapse at a time when Americans are already struggling with skyrocketing inflation and a lack of affordable housing. According to Peter Atwater, professor of economics at the College of William and Mary, Burry is validating that feeling of dread, and his correct prediction of the housing market meltdown gives him credibility, especially to novice investors who've never experienced a recession before. Today, Atwater stated, "Vulnerability is at an extreme degree. In uncertain times, we have a tendency to follow others." The creator of Scion Asset Management has gained notoriety since he was immortalized in Michael Lewis's book The Big Short and the associated film, in which he was portrayed by Christian Bale, despite rarely appearing in public or making statements. The only things on his company's website are a contact page and a faded world map put on a blue background. Burry tweets as Cassandra BC in apparent homage to the priestess from Greek mythology who was destined to provide accurate prophecies that no one would ever believe. He has almost 930,000 followers, yet does not follow any other accounts. We place a lot of value on assurance and feeling safe, so when we see these tweets, we could assume the author is knowledgeable. The speaker stated, "It would resonate with someone who feels anxious." According to Dan Egan, head of behavioral finance at robo-advisor Betterment, investors generally give more attention to forecasts concerning downsides than upsides. Burry has more credibility because he was right the last time and staked his financial future on his convictions. Before the global financial crisis hit in 2008, Twitter was still quite new, particularly in the field of investing. Famous investors and regular traders could not congregate in an easily accessible forum. In 2022, there are too many platforms to keep up with, including Reddit, Discord, TikTok, and others, in addition to Twitter. Young traders analyzed Burry's tweets on TikTok, with one video that received 15,000 likes referring to him as Recession Guy. Since his tweets disappear so rapidly, it's difficult to gauge their popularity, although it's not unusual for them to receive hundreds of likes in a matter of minutes. You may now ask why Burry would publicly reveal his investment opinions and speculate about a possible ulterior motive. Burry's tweets, though, might be resonating because he makes general predictions about markets and the economy, rather than offering particular trade recommendations. Reactions on social media reflect and reinforce mood, especially during a bear market, at a time when well-known investors and business leaders like Elon Musk and Catherine Wood are using Twitter as a huge platform. The tweets that express our feelings the best are the ones that are shared and liked most, according to Atwater. Twitter is a large mirror of the feelings of the general population. On July 28th, Michael Burry posted a series of tweets in which he criticized the White House for ignoring the impending recession and raised concerns about inflation, credit card debt, and labor shortages. He wrote on Twitter on Sunday, "The White House would like you to reframe a recession as one in which consumers are not using credit cards to cover inflation, and neither is the labor force inadequate for the size of the economy." Burry continued, "GDP out Thursday. Not that there's anything wrong with that." Burry's tweet included a screenshot from a recent White House blog entry. A recession, according to the Post, isn't just 2 consecutive quarters of dropping GDP. Rather, it is identified through a comprehensive examination of data on real income, real spending, industrial production, and employment. In its post, the White House continued by dismissing concerns about a recession. It indicated that despite rising inflation, real income was increasing because of historically robust household savings and the labor market. Burry's tweet suggests he had a problem with that defense in particular. In his opinion, Americans are running up credit card debt to pay for rising living expenses. And the reason why the jobless rate is so low is because the economy has outgrown the country's labor force. Additionally, according to his tweet, he anticipates that Thursday's GDP figures will prove that the economy is in a recession, and that the White House's blog post is an effort to divert attention from the coming barrage of criticism. The investor and financial historian has previously expressed concerns that as consumers deal with rising food, fuel, and housing expenses, they're borrowing more, saving less, and are almost certain to deplete their savings by Christmas. He predicts that the ensuing decline in consumer spending, along with merchants reducing prices to get rid of extra inventory, will lower inflation and hinder economic development in the latter part of this year. Additionally, Burry has forecasted that there will continue to be a lack of unskilled and semi-skilled workers, which he believes would result in increased long-term inflation. He doesn't trust the Biden administration's argument that incomes, spending, output, and employment numbers are in good shape, and that a recession isn't imminent because of his expressed concerns about consumer spending and labor shortages. So why does Michael Burry think we're in recession? The economy also encounters peaks, characterized by expansion and high employment, and unavoidable troughs, which are periods of decline known as recessions, in the same way that firms experience general phases of development and contraction, known collectively as their business cycle. Simply explained, a recession happens when economic activity declines. Although economist Julius Shiskin was well known for defining a recession as 2 consecutive quarters of falling GDP growth, modern economists now take into account a far wider range of indicators. But who declares a recession? The National Bureau of Economic Research, or NBER, is regarded as the foremost expert on economic matters in the United States. It establishes whether the American economy is expanding or contracting. A recession is described as a periodic period of reduction in total output, income, employment, and trade, often lasting from 6 months to a year and marked by widespread contractions in many sectors of the economy. The NBER can determine the exact beginning and ending dates of recessions using statistics. The White House wants you to define a recession as one in which consumers are not using credit cards to pay for inflation, nor is the labor force too small for the size of the economy. Michael Burry notes that this is where the problem lies. The facts appear to support Mr. Burry's statements, and he has the background knowledge and expertise to back them up. So what do you think about all of this? Be sure to let us know in the comments below.